Hello everyone, my name is Blaine Pearson and I'm a graduate instructor in Texas Tech's Personal Financial Planning program. In this video, we're going to look at the various tax advantages from college and university education. Before we begin, I just want to highlight a few of the very basics of tax. And so to start here, let's take a look at the basics of what a deduction actually is. So a tax deduction, right, is something that is above the line. So when I say above the line, I mean something that is before you get to the second page of your tax return. So that is what your AGI is. So if it's above the line, it's used to determine your AGI. And then once you have your AGI, these itemized deductions come in, or rather the standard deduction if you like to take the standard deduction instead. So let's get into what is actually available. So for tuition and fees, you actually get a nice adjustment to the gross income, and it can reduce your AGI by up to $4,000. And what you need to have to be able to do that is to have qualifying expenses from education, such as tuition, required fees, books, equipment, those types of things to qualify to receive that deduction from your income. Now there is a phase out, so if your AGI is at 160 for married filing jointly or 80,000 for single, there is a phase out in that range, and once you're outside that phase out, you no longer get this adjustment to gross income. So someone can claim you as a dependent, they get the deduction. You are also not allowed to claim the dependent as well if you're a student. This would be kind of a double dipping. Alright, let's talk about one other deduction that you can receive to arrive at your AGI, and that is the student loan interest deduction. The student loan interest deduction is $2,500 that you can deduct from your income, the above line deduction. And the phase out for that starts at 65 to 80,000 for single filers, and then 135 to 165 for married filing jointly. All right, now let's switch over to credits. So after we have arrived at our AGI, right, we take our standard deduction or our itemized deduction, and that is our taxable income. And then from there, we apply our progressive tax brackets and we get the tax liability. That's the amount we owe. Well, what we actually can utilize are what's known as tax credits, right? So tax credits, which actually eliminate some tax liability. So tax credits are actually much more valuable than tax deductions. And let's talk about one of the most commonly used credits, and that is American Opportunity Tax Credit. And what this is it's a credit that's available for the first 4 years of undergraduate education, up to $2,500 per student. Technically, the way the formula works is it's 100% for the first $2,000, and then it's an additional 25% of the next $2,000. So assuming that you meet this, you can receive up to $2,500 of credit per student. And this is only for qualifying expenses only. Now, in order to qualify, the dependent or you as a tax filer must be enrolled in a degree plan, and it must be at least half-time. If it is a dependent situation, the parent does take the credit, and there is a phase out as well. The AGI is 80 to 90 for single, and then 160 to 180 is the phase out bracket for married filing jointly. Now let's talk about one last credit, and that's the lifetime learning credit. This is a credit that is unlimited, so you can use it for as long as you intend undergraduate or graduate education. And what's really great about this is it's also for graduate education. The American Opportunity Credit that we just looked at is only available for undergraduate education. So the lifetime learning credits for graduate education, that's how I remember it, is lifetime graduate education. It's perpetual. And what that actually, what that credit is for the first $10,000, you can receive a 20% credit. And so that is a $2,000 limit. And that is not per student, that is per taxpayer. So if you have a situation where you have multiple dependents, you still are capped at $2,000. So there is no limit on the number of years claimed, so it's perpetual. You can continue to claim the credit as long as you meet the qualifications. The phase out for this credit is $56,000 of income to $66,000 of income for single, and then $112,000 to $132,000 for married filing jointly. And that is all. I'm going to leave you with some additional information since we did not touch on this for the American Opportunity Tax Credit. Please review this information. You can pause the video to review it if needed. Again, this is Blaine Pearson, and in this video we covered the various tax advantages from university and college education. Thank you for watching.